Section 1, that thing you heard about, Bollinger Bands? Probably a lie. Okay, so let's get into it. There's this huge myth floating around the internet, and honestly, it's kind of a problem. People think Bollinger Bands are this magical secret crystal ball for trading. They think the second price touches the top line, it's a giant flashing SL now sign. And if it touches the bottom line, people think you must buy immediately. That's not how it works. It's the fastest way to lose your money. Then you'd be sad and I'd be sad for you. So yeah, let's throw that idea in the trash. It's a total lie. The reality is less dramatic, but way more useful. Think of Bollinger Bands not as strict rules, but as a vibe check. They're just a tool, one of many, to read price and volatility. They don't predict the future with 100% certainty. Nothing does. Anyone claiming a never-fail tool is selling something sketchy. Bands give context, calm or chaotic. That's the T. Section 2. So, like, what are these bands anyway? Imagine a price chart for your favorite iced coffee company. Bollinger Bands are 3 lines drawn on that chart. Sounds complicated, but it's really not. There's a line in the middle, one above it, one below it. Like a little river channel, the price flows through. The middle line is the average price, usually 20 days. Think of it as the baseline, the status quo, the vanilla latte of the chart. It smooths the daily jumps to show direction. The outer bands are the interesting part. They're based on how much price has been bouncing around. That's called standard deviation. How far from average? Big ups and downs, bands get wide. Boring market, bands get tight. That tightness is a squeeze, a heads up. Top band equals middle plus 2 standard deviations. Bottom equals middle minus 2 standard deviations. Standard settings, 20 period MA, 2 SD. Software does the math. Think average line plus 2 stretchy boundaries. Section 3, the real T, how to actually read the chart. We have our 3 lines. Now what? First, forget touch and sell. Look for patterns and context. Classic play, the squeeze and breakout. Tight bands, that's your cue to watch. Breakout above the top band or below the bottom band. Example time, Cool Jeans Inc. Trading around 50, bands really narrow. Then a big green candle closes above 52 with a volume spike. That could be your buy signal. Set a stop just below the middle band, say 49. Protects you if it's a fake out. Price at 100 hits the bottom band at 96. A beginner thinks buy, but a big red close with high volume can mean downside breakout. That could be a sell or short. Key is confirmation, price action plus bands plus volume. If price walks the upper band without pulling back, buyers are in control, strong uptrend. Scraping the lower band, sellers in charge. Don't rush to buy. Don't treat bands as red or green lights. Treat them as volatility. Getting crazier or super chill, that's it. As much as I love bands for vibe checks, they're not perfect. Ranging markets can throw false signals. Bands are reactive, lagging based on past data. In fast markets, signals can arrive late. Never use Bollinger Bands by themselves. Use RSI, trend lines, candlestick patterns, and always check volume. Low volume breakouts, often traps. Manage risk. It's non-negotiable. Always have a stop loss and know your risk before entry. If a trade goes wrong, keep damage contained and move on. Quick glow up checklist for smarter band trading. 1. Identify trend. Price versus middle band slope. 2. Look for a setup. Squeeze, then a real breakout close. 3. Confirm with volume and at least one other indicator. 4. Plan, stop, loss and target. Aim for 1.5x to 2x your risk. Tick all boxes, then practice on a demo until it clicks.